Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for November 4th, 2022, Friday night. A lot of stuff to cover. So, I was working with um, a tool maker from the UK, Chris White, who has EdgeRater.com, a Excel tool, and we're looking to partner on some of our indicators for his people and to able to teach them. So, I was putting together a few case studies from this morning's trade. So, took me a little longer to get ready today. So this is one we looked at EWZ yesterday. This is the sniper trade of the day from this morning. And just as we played the gap yesterday in FIS, um, this is Brazil's close yesterday, and then a great big gap up today. This is the 3-minute opening range. It breaks down. When it starts breaking down, you just make a reasonable assumption that, well, we wouldn't be surprised if it closed the gap. So we put a standard entry here, a minimum manageable risk box, 25 cents in Brazil. It moves across the dragon, stabilizes, and starts to move up. And I just said, you know what? We'll take two, call it a day in that trade, and move on to the rest of the Ranger objective. So 2R. Some other ones. This is URA, the uranium ETF. Now, I was span of control in some of this stuff, although there were certainly tradable moves. You know, there's the OR3. That's a tradable move. This this COTA 2 is a tradable move, but it came into the station, if we can call it that way. And this is what we got. Not OR. The COTA 2 with the PSAR flip with standard risk box. This is where I missed one. This was a key support level. It's a combination of the RL10 and the Dragon. So right around here, you know, we're holding about 2R in hand. So this was the one that got away. Standard exit with a PSAR flip, and that's now an SSC, supported spring crossing. That's not a surprising place for it to hold, because that's where it closed yesterday. So the gap up, harsh sell off, and then find support where it closed. So that's one unit of risk. That's 1, 2, 3, 4. If we'd have taken that second entry somewhere around here, that would have been two extra ones that could have been 6. Grinding, 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 grinding. It finally cleared, and the rest of the market, especially energy, was starting to move. So I just dropped the second one on and took the standard exit to be flat going into the weekend. So there's one unit of reward. That's about 2R on this one, about an extra one on that one. So that's plus 3 and 4. So that's about 7 in uranium today. Tesla, nice big gap up. Close was way down here. Big gap up. Here's the OR3. That was a tradable move. I had my hands full, span of control, but I did have time to take the COTA 2. Standard risk of $1.50 in Tesla. Standard exit for 2R. Those of you that were paying attention today know what is about to happen. So PSAR flip, I gave it a little extra room, but standard entry. This is the one I caught. There's the support level. I treat that as a collapsing dragon for the second position, and we've got a little over 2R in hand already. Consolidation, collapse. So this is, I think of this as a collapsing shelf. You know, when you got that consolidation area, and it does not violate the PSAR and then starts a new leg down. It feels, to me, I always say the size of this leg is the size of that leg. So now we get 3 positions in, and squeezing, cash. So this was the move of the day. So there's 1, 2, 3, 4, 5, 6, 7, 8 on the first leg. 1, 2, 3, 4, 5. 5 on the second position. And 2 on the third position. That's 15 plus 2. So we're at 17 in hand. So why not? PSAR flip on the SSC. And pick up another one to make it around 18 for the day in Tesla. And guys, there is nothing fancy about that. That is pure standard work on the most important stock, the one we look at every single day with standard risk and standard patterns. You couldn't get a less surprising trade than Tesla today. Here's Weyerhaeuser. Now, Weyerhaeuser was interesting because I was looking at it yesterday with Chris White because we were studying different statistics in the S&P 500 for the various sniper patterns. And I had noticed a nice move yesterday in Weyerhaeuser, a nice industrial company. And so we decided to take a look at this one. So here's a tradable move. You know, again, the gap up, the OR3. So if you're short here, that's a tradable move. You shouldn't lose money on that. If you take the COTA 2 once or twice, you should be able to make bank somewhere around in here in the usual way. This one did the PSAR flip, standard risk. The whole market was weak. I mean, sometimes the fish just want to jump in the boat. So 1 unit of risk, 1, 2, 3, 4. So plus 4 in Weyerhaeuser. Now this is the opposite of a sexy, groovy cyber tech bio symbol, you know. This is Weyerhaeuser. They make stuff and they store stuff and they transport stuff. But these liquid S&P 500 companies trade like this. A couple scratches. I was trying to catch the COTA 2s coming out. The third COTA 2 hit for another couple R. So that's about 4 or 5 in Weyerhaeuser. So it doesn't have to be Tesla or semiconductors or anything. You can get just a basic American trucking company. Yeah, so that's the big picture in Weyerhaeuser right there. Kinder Morgan, I was interested in the metals and the raw materials today from yesterday's report. And again, this is almost an identical pattern. And this is my favorite one, and missed the Kata 2 because of um, span of control in Tesla. This is when that second and third position in Tesla was hitting, but this one just because. Kinder Morgan, a mining company. That was the Tesla snapshot, sorry. And uranium. Okay. So quite a lot of things going on in the market today. So let's take a look now to the regression line fractal. We've got this, symmetry happening, support level at the support level, the first leg up and a pullback. And now everything is clustered right around the descending RL270 and RL90, but today was a tiny little recovery. Today it failed to fail and closed very well, and guys were willing to hold positions on the long side. That is very favorable for next week. I'm cautious because of the election, but so it really has to get above 390 to be persuasive. So this is the tactical zone. Today's little bump could very easily have been just a bear trap for the uninitiated. There was a nice employment report, but the political impact of the election next week is going to be decisive. So you could very easily see a tactical trade to the downside, but if it breaks below about 360, that could be decisive, and a break above 390, that could be decisive. But this whole trade space inside here between 390 and 360, that's about an 8% range. This is all tactical noise and short-term momentum until we see something decisive happen. So I want you to be careful about that going into the new week. Today was really just an oscillating kind of day in the broader market, right? So here's the marker. So it moved up, moved back, and closed well. So really, there wasn't much extra room. It just kind of settled in. There were some sectors that did well, but the main thing to me was that it did not fail. It did not fail at all. So people were willing to hold this price level going into the weekend. So tentatively, this is still like a Kata 2, and there's room to go. But again, it's got to get above 390, that 10-day high, before it's really persuasive. Looking at 30 days now on the daily charts, you can see that today was, if not a vote of confidence, at least it didn't fail. This is a 1-2. You had the higher low, so this is bar 1, bar 2. So next week, if we get a breakout above, call that 378, without making a new low below 370, then that would be a 1-2-3 entry, and you can buy that. But then the real decisive move is above 390. So this is the tactical gain space. And then anything below, I would say 370 is look out below. And your first target would be down here. And if that breaks, look out below. Looking at our longest term, the 150-day look back. Yeah, be mindful that what we are in is in a compound critical state right here. It held support halfway between the 30-day breakout in either direction. So that makes this pure tactical space in here. All right, let's look at the sector performance today. Pardon me. Oh. How did we get all that? Let's try that again. All right, so we got the S&P right smack in the middle at 1.44. Tech was a little better at 1.6. Emerging markets was the best index by far at 4.23. The Russell and the diamonds were a little worse at 1.3. And then treasuries brought up the rear at minus 1.68. So really favoring the rest of the world right now. But there are other indexes, not really that much difference from the S&P. Today was, a little careful optimism, I would call it, I suppose. All right, let's look at the underperformers first. Again, our baseline in the S&P at 1.4. Looking at our indexes, here's real estate and clean energy up 1.35. Agriculture and staples, the defensive plays, 1.26, 1.18. Consumer discretionary, 0.84. ARC Genomics, minus 0.46. Here's the cut line between gains and losses. There's biotech, minus 0.8. VIX, minus 1.2. ARC Innovation, minus 2.71. Tesla, the big loser of the day, and you saw that 18-hour trade, minus 3.6. Find the mover, especially if it's Tesla. There's our little specialty guy in energy, Devon Energy. Up, he was only up 1.06 compared to the broader market. And that to round out the individual targets, you got PayPal, 1.79. Rivian, 0.78. Robinhood and Apple, minus 0.36. So a variety of weakness that we could have drawn upon today. Let's look at the upsides. And all right, let's see. So here's our baseline again. The S&P at 1.44. The first big cluster that was better. So you got tech, finance, and oil exploration up to 1.93. The Aussie dollar, FANGs, Brazil, uranium, commercial real estate in Mexico up to 2.9%. So very strong, broad index support there. Marijuana, 3.29. Now a nice cluster, and this is why I was interested in the materials so much today, like Kinder Morgan and whatnot, because you had blended commodities were strong all day, materials, wood, everything looking good, and there's the other lumber at 4%, 3.5%. So the whole industrial sector was very strong today. You had Bitcoin at 4.5%, oil 4.8%, lithium at 5%, Ethereum 7%. Wheat and precious metals, 11.8%. And now for the big deals of the day. We talked about the metals being postured for excellence. Alcoa, 12.5. Cliff, 9.6. U.S. Steel, 8.76. People ask me all the time, why do you look at the metals? Because they move. The metals, it starts with M, and M is for movers. Find the movers. Here's our chips. There's NVIDIA, 5.5%. Texas Instruments, 4%. Intel, 3%. So there's your semis. Why do I follow the semis? Because that's the modern economy. And then the metals is the physical economy. Those two are really important. And then you need energy, like Devon Energy, to move things. That's why I concentrate on those sectors and those key members of it. So there we are. Let's take a look at the traders today, see how they did. Here's Tim. He did some very nice work by incorporating the multi-time frame, uh, multi-lens analysis to try to stay in connection with the larger trend, and he was able to do that as you have a rising VWAP and everything was north. So he had a couple quick losses, but then started to find his traction, and then got more in tune with the market as it was working. So +2 for the day. Very well done. Stayed with his discipline all the day, and that was good work. And this was the chart he was using to get that broader market direction. And so where he really was on his tactical trade, being located inside here, he was really trading that second leg of that move off the bottom. And when it clears this height, that really unleashes the hounds. Here's Nolan on with crude oil. I like this effort. Good, and I like the stop and reverse, aiming for the VWAP. Couple good quick scratches. Keeps firing. Gets paid. That's where when this fails to fail, when this does not come to the VWAP and you get that higher low, that makes this a COTA 2 that you got to crush, and then that could be your second entry. Now, I also want you to notice that if the R10 does not come with the price, you got out because price penetrated. But when the R10 doesn't come and it reverses, you got to get right back on that horse and crush this all the way. This is where the exit signal is because the R10 breaks the VWAP. See, this extra little bit of weakness in here is what brings the R10 closer to the VWAP, and then that little pinch gets you out. Now, you could legitimately be short here with an effort to come here, and you wouldn't lose money on that trade, but then your COTA 2, you got to be crushing that COTA 2. So we should have been about +4 on this one today. Focus, and just you're building up cardio and expertise, so just keep staying with it. All right, here's Woj from yesterday on Devon. Lots of chopping around, but finally gets aligned, and once he does, he crushes. We should be doing better on Tesla than this. He missed that. He would normally get this move, but was span of control. But +4 out of that pair. On his XRP, gets the breakdown out of the Z3P. He's got this nice cluster. There's the rollover of the dragon. Clear, crushed it. Excellent exit. XRP got a little choppy. He got paid a little bit. Still a lot of chop. So net positive for that pair. Solana was problematic for him. Lots of chop. Never really got the big moves that he normally gets. The one big move that he would typically exploit. Naturally, he's in the meeting. That's our running joke. Now, Tesla and Devon from yesterday. He smashed Devon yesterday. Tesla was a scratch. Then shifting to Devon and Tesla today. He gets the big move in Tesla. That's the same move that you saw me get. Now, here's where I need you to pay attention. That break, you got to get that, and then on this collapsing shelf, you got to get that. You have enough money in hand that this should have been +10, although it was +5. That's pretty good. And then this one, lots of chop. I think when this breaks, now you got the trade that was available. I think you're all right on Devon there. I think you're a little bit too nervous up in this area. A little too active. XRP, boy, just this is the reason to dip your toes in that water. Started trading here, missed the he was he started trading but was not prepared. So don't start trading until you are prepared. So he finally was able to get in, quick reverse, got paid, got paid, got paid. And that short, man, we should have been on this one. And made reasonable bank inside here, but that's 6R and XRP. It may not have felt like it, but it was. And then he finishes up with Solana today. Just keeps firing on his preferred target. And he picks up 6.8 today, 10 on all the other ones combined, a 17R day, a 28R week. And that's not even getting this because he's in, you guessed it, a meeting. So, Woj, your numbers are looking really good. I'd like to see another, like every 50 that you get now, to start getting that chunks of 50. I want you to coordinate with Luke to see how he did the comparison of sets of 50 for a time series, because you're in the position now where you're at production level and it's really working. So very nicely done. I think that was the last one posted. Yep. Let's get to the reports. All right, we start as always with the weekend report, so cleanse your palate. And the weekend report is normally, we're looking at longer term things for like swing traders. Still, most important thing I look at, the very first thing, market classification, bear normal. This little bump today brought us back up into healthy on the 2-day, but still residual weakness longer term. The risk C is telling us that there's reasons to be interested in the long side, that if it can break above this 1.0, you can get a nice extra move in here. So that's there could be a relief rally next week after the election shenanigans are over. ETF2 remains at 30% exposed. These are the best performing indexes in the BMR environment. And we've seen those already. So let's go to the BMR portfolios themselves. So these are the only 3 that are above their 4-month moving average. Latin America, diamonds, and mid caps. And Latin America is just the only thing that's even looking good now. This one is really surprising to me. The real estate being stood up. But then with housing prices starting to crater, all that easy flipping is over. So I think that's what we're seeing there. And then problematic that tech is so low in the stack. And that feels almost like a washout week. So, I mean, you got to be ready for that thing to have hit bottom and start the. There's room in it, is what I'm saying, for a rebound after the election. So it's like a coiled spring. Let's be postured to be ready for that. When you add the XL series, you get the X like XLE, and now you can see the strength and energy. Double that of the best performer in the ETF 13. That's why you got to pay attention to energy as a swing. And then you got industrials and finance. This is where all those materials were helping as well. XLB and XLI, that's like Weyerhaeuser and International Paper and stuff. Kinder Morgan. You like it when the mid caps and the small caps are better than the S&P. And then here's tech. As soon as tech comes online, that's going to boost the S&P and take up leadership. So there's room for that to grow. So we're going to closely monitor that and be ready for the turn. ETF 32, we add more country symbols and some narrower sectors. including like blended commodities were very strong this week. Oil exploration in Brazil get added in this. That's pretty good work. Coming, really responding well in Brazil to their election. So, just you can't help but notice China just getting destroyed here. If you don't think that's putting political pressure on them, you'd be wrong. In the Dow, there's some strength that we want to be mindful of. Boeing, Honeywell. We talked about Honeywell last week. I haven't shown you any charts on it, but boy, is that a great run company. Man. Chevron in energy and Caterpillar in the industrials. That is such a healthy sign for a great company. I should have been stronger on the emphasis of that. Let's take a look at the U.S. market. Now, this is an interesting divergence in the U.S. market. So you got the Qs at 15 on the index, while all of the value players are above average. That is a huge weakness in the NASDAQ. And you got to think that there's folks sharpening their knives, ready to pounce on that one. Meaning that they're ready to buy them on sale. That's what I'm trying to say. Mix my metaphor. Looking at the top portion of the BMR report, biotech is a green and white. So come here, look at green and white. It was good, now great. You can exploit new strength because this is new leadership. That's biotech. So we like that. Otherwise, this is all energy and Brazil. Energy, Brazil, Latin America is having the strength. Can't get any clearer signals than that. Looking at the ATR percentage column to find our tradables. The top 30 ETFs by average daily dollar volume over the last 30 days. Here's a cluster. Brazil, tech, China, semiconductors, consumer discretionary and biotech, and the gold miners. Very liquid, very volatile. All right, let's look to the daily. We're going to leap right to dashboard 1. Apple on a auto framer, Disney, Microsoft. Microsoft we alerted yesterday, and it was up 3.2%. It's still pretty good. Wasn't one of the best performers. That was Nike, Dow, and Alcoa. But still, that's a really nice recovery in Microsoft, and it's 3.6 to 1. I think that's the gem of a tech resurgence if we see that next week. I think you got to be really well prepared to jump on that one. Microsoft in a great position. Oops. In the ETFs, only a couple dojis, only technology on the auto framer. Lots of big breakouts to the upside today in the internationals. Energy and materials, and then oil exploration smashing it. So no surprises there. You cannot hide from your price. Price will not lie. You may not like the price, but it ain't lying. Just a few squeezes, or I'm sorry, a few auto framers. Cliff, Microsoft, Disney, and Tech. That's a pretty good lineup. And then just one squeeze in McDonald's. Taking a look at our snipers now. Still a lot of snipers available in the S&P 500. The ones that are green and green, These are already enraged um, Godzillas, right? So they are at an extreme location at the bottom of their stack, and they are moving on a 5 day and a 1 day. Now, whereas Bax is at an extreme condition, and the 5 day is volatile, but the 1 day is unvolatile, meaning that today's move ended in a doji. So you could expect that to be a critical state ready to break in either direction. So I look for the divergences and the agreement. So this is an agreement on an enraged Godzilla. He's already in action. These two that are green and red, that looks like this: big sell-off, little doji tight, and now it's ready to break in either direction. If you looked at TYL and AIZ and Loom, you would see that the 5 day and the 1 day are just moving in the direction they're going to move. In this case, all down. So that's how I read that. Only the VIX is in a Godzilla for our tactical symbol set. The 1 day movers is becoming my favorite place to find the anomalies. Um, so these are all better than 3 sigma a move. That's an extraordinary sized move. And when you combine that with current volatility like these double greens, look at MSI. His location on the 150 is 95, 92, and zero point 0.8 and extremely volatile. You know what that chart's going to look like before you even go look at it. So let's go look at it. Picture in your mind what you think that chart's going to look like. So I'm going to shift to here's the power TC 2000. Go to there. That was MSI. I'm going to jump to the 3-month. Yeah. So here's our 150-day look back. All right. So here's the 150-day high, 150-day low, and it closed right here. So it's in the top of that stack. And then here's the 30-day look back. And again, you can see it closed in the top of that stack, in the top of the 10-day stack. So by trade location, this thing is just ready to break out of this long trading range. And if it breaks above, so if it breaks above this little noise cap right, and that's where price is right now. So it breaks above here, the next 2 price levels are here and here. This thing can get to 290. That would be the relief rally. And this almost has the form of a Kata 2 with powerful breaks. Would you bet against those guys? No, you wouldn't. Motorola. And then now we're going to take a look at the shorter term volatility. Look how volatile the 1 day and the 5 day. So this is the 1 day in that yellow box. And then the 5 day is this blue box. Look how large that 5 day move is. That thing is raging and in play. And today's move was, 5 or 7 sigma? So that thing's in play, and there will be more momentum on that next week, starting on Monday. So that's why we would like looking at that, at the 1 day movers, 1DM. And when you get that combination of green and green combined with excellent trade location, MSI, Motorola, that's in great shape. By the same token, you got a lot of things in that same kind of category already. I would say Monster for the jobs, that's ready to break out to the upside. He's all above 0.8. Whereas something like NOW, look how weak those index are. That's going to look like something that is all the way down and ready to break down. So once you learn to read these numbers, you can quickly find the kinds of things you're looking for. You might look at general dynamics over here on the most quiet, saying, look, here's a divergence, red and now green. So it's been uber quiet on the 5 day, but the 1 day was a big breakout. What does that kind of pattern look like? Good question. Let's go look. Yep. The 5 day is quiet, the 1 day is large. And ready to break out of his box. The 1 day range was as big as the 5 day range, and the 1 day range was 70% of the 10 day range. That's how big today's move was in Motorola. If this thing breaks higher, look out above. And that's at an all time high. General Dynamics. Be ready. And we can tell from our range stat and our R10 that it's a 75-cent intraday MMRB. All right, enough. I'll leave the rest for your analysis, and we'll be ready for tomorrow's swing trades. I should bring to your attention that I put a coupon on the Patreon page for taking the creativity to it. We're about 2/3 of the way through that course now. It's the guided tour through it when guys are getting weekly coaching from me and doing the live True Story Circle. That course is $3,000 because of the commitment and the effort that people are making to coach and be accountable to each other, and you can see the results in the work. But the home study course I wanted to make available to people, so I slashed $2,000 off that, and that will let you view all of the courses at your own, or all the lessons at your own pace, and listen to the already over 100 hours of true story exchanges in the circles, and you're going to benefit to an extraordinary degree on that one. And that's why I want more people to be able to take that course, and so the dramatic price reduction for the in the month of November. I would also say that in the future, if you want to, if you take that course and you're listening to the True Story Circles and you want to participate in something like that live, I will let you add the like the live coaching portion, almost like a learning laboratory. I'll let you add that for an annual fee later, so you'll get a good deal on that too. So just wanted to bring that to your attention. That's everything I got for today, and we will see you tomorrow in the chat room and the for the swing trades. So take good care and see you tomorrow.